Para hablar más en profundidad del mercado de renta fija, saludamos a Arnaud Mounier, jefe de desarrollo de negocio de renta fija en Alliance Bernstein. Arnaud, good evening.
Good evening. How are you?
Arnaud, how have fixed income markets react to the escalation between Israel and Iran?
Well, I must say the market reaction so far has been very muted. Interest rates have not moved a lot, both in the US and in Europe. Credit spreads are also not really reacting much so far. It's really oil prices that have moved. And basically, it tells us two things, in my opinion. It tells us, one, that investors are quite light on risk, and they do not need to sell a lot of risky positions to sell through all the geopolitical news flow. And the second thing is there's still strong demand for bonds overall, as evidenced by a busy week of new issuances in the European high yield market.
Last month, Moody's downgraded the U.S. sovereign rating, citing high interest rate payment and increased deficit. Have investors and clients expressed concern about investing in the U.S.?
Okay, I would say maybe in a fairly simple way that there are a lot of talks about investing less in the US and investing elsewhere, but not a lot of action. We are looking at the participation by foreign investors to the new US Treasury auctions, and the participation level is similar to those before Liberation Day in April. And the reality is it's very hard to find alternative to US assets. Now, that being said, US dollar is still weakening versus euro, versus the Swiss franc, versus Japanese yen. And so we are seeing some domestic investors, like in Japan, like in Europe, who are favoring at the moment their domestic assets instead of trying to invest a lot in the US. What the market seems to discount maybe a bit too much is we are getting close to the end of the 90-day tariff pause that was declared by President Trump. And early July, we will see whether the tariffs are going to come back. For Europe, the negotiation seems to be complicated, and we could face another round of tariff headlines and volatility in July because of that. So that's something we should pay attention to as well.
Arnaud, the ECB cut rate 2 weeks ago. Do you expect more cuts in 2025?
Yes, we do. We expect at least one more cut before year end. And the risk of more cuts is actually increasing because growth in Europe is unfortunately tilted to the downside. Again, I was mentioning the risk of tariff coming back for Europe, and that's certainly a risk for growth in Europe. Inflation is less of a concern to the ECB. We think that by 2026 and in 2027, inflation will be below the target of the ECB, the target of 2%. So inflation being less of a concern, growth will be the primary driver for the ECB. And definitely, we could see a more supportive ECB, even though we expect growth to rebound in 26, 27, when especially the German stimulus, the fiscal package that Germany has voted for, is going to support growth, but that's probably 2 years from now. And there is still a reason for the ECB to support growth in the meantime.
And my last question, Arnaud, what are your recommendations in fixed income investors to do in this context?
Well, I would say in this context where short-term rates and deposit rates are going to go down with the ECB cutting rates, you want maybe to be less in cash and to move in more intermediate, I would say, duration profile. We think that if you increase your duration to 4-5 years for your portfolio, it will provide you enough ballast to your asset allocation in case of market sell-off, whether you are exposed to equity risk or credit risk. And so having some duration is quite important in this market context. I would say if you look at the credit spreads in Europe, investment grade spreads, high yield spreads, they have all rallied very strongly back to the levels pre-Liberation Day. And so what does it mean to us is you don't want to be taking too much credit risk at the moment. You're not really paid to take too much credit risk. So we want to remain quite prudent with our credit risk allocation. We still like better quality high yield, BBB bonds, but you don't want to go too risky in your credit allocation.
Arnaud Mounier, jefe de desarrollo de negocios renta fija en Alliance Bernstein, thank you for joining us.
Thank you very much.